Coming up in this video, we have 4 stock picks for you from a trader who has 30 years of experience as a technical analyst and trader. He joins us now. David Paul is from VectorVest. David, welcome.
Good morning, Jeremy. Thanks for having me. It's a pleasure to be here.
First of all, before we get on to your stock picks, VectorVest and David Paul, what is it all about?
Well, VectorVest finds undervalued shares that are growing their earnings aggressively and safely, and it recommends buying those shares when the general market is rising. So to that end, VectorVest puts a value to every share in the market every single day. It puts a value to the earnings potential of the share over the next 3 years. It puts a value to the earnings safety of the share, puts a value to the trend, and it puts a value to the general market. And when a computer gets a number, it can scan through the whole database and find shares that fulfill those criteria. It's totally and utterly objective. I'm a technical analyst, and I in fact tripped over VectorVest some years back because as a mechanical engineer to start with and with a PhD in mathematics, I didn't have the tools to do the fundamental analysis. Every time I got the hang of the accounting rules, the accountants changed them. So I get so excited about VectorVest as a user, and then VectorVest asked me to actually be the front man for the program in the UK and in South Africa, and I've been doing that now for the last 5 or 6 years.
Is the basis just in technical analysis, or does it import any fundamental analysis into it at all?
We look at the fundamentals of every share for the last 5 years. We buy that data from Thomson Reuters, and every evening the algorithm crunches up those numbers and spits out value, earnings potential, earnings safety, and the trend of the market. So what we're trying to do, Jeremy, is the best of both worlds. We want to try and find shares that are fundamentally really, really sound, and we want then to use technical analysis to get in and out of those shares at the very best level. So the best of both worlds is a good way to, in fact, summarize the product.
My understanding is you focus on direction, momentum, and also market breadth. Now, this is something that not many traders know about. Explain more about these 3 heads and market breadth in particular.
Well, in our market timing models, we look at the VectorVest composite. Now, the VectorVest composite is a composite indicator of all of the shares that we follow in the London stock market and on AIM. That's 2,200 shares. And it's the broadest measure of the London market that I know of. And in our market timing models, we have 5 of them, but in our market timing models, we look at the price of the VectorVest composite, the momentum of the VectorVest composite, and the breadth of the market. Every evening we assign a buy, sell, or a hold recommendation to every share in the London stock market and on AIM. And we calculate daily the buy-sell ratio, the number of shares on a buy divided by the number of shares on the sell, to actually work out market breadth. Our short-term systems are for swing traders, for those people that are spread bettors, for example, over 2 to 5 days. They would use our short-term systems, and we have medium-term systems which would keep you in that trade for maybe 3 weeks to a month, and we have longer-term systems based on our proprietary indicator called a confirmed call, which will keep you in the general market for years if the general market remains up. During the course of this year, we got a buy signal from our longest market timing system, the confirmed call, on the 22nd of February, and that in fact was in place until a few days ago. Okay. The shorter term systems come back and forward, in and out. Really, really cool for spread bettors.
Okay, looking at this composite chart, what's your call at the moment? And clearly there's a divergence going on here. You've got this rising market on the top panel. Bottom panel, you've got a fall off in what I believe is a market timing indicator?
Yeah, the indicator at the bottom is called the MTI. It's a composite indicator between the momentum of the composite and the momentum of the buy-sell ratio, all rolled into one. And as you correctly say, the market has been rising, making new highs, but the MTI couldn't follow it, and that's what technicians refer to as a bearish normal divergence. The composite and the FTSE 100 for that matter have been rising in what technicians refer to as a rising wedge, or the Elliott wave, people call it a diagonal triangle. And this market has been shouting at us for the last 5 or 6 weeks that there is a trend change. Technical analysis is a study of trends and turning points. And this market has been shouting at us for the last month that there's a rout on the way, and that rout happened last week. I think that the market's very, very oversold at the moment, and it needs a rally. And I think that the only thing that would cause us to fall strongly from here would be what technicians refer to as an event, and clearly there is scope for such an event tomorrow. But the market's well up this morning, and I do a blog at vectorvest.co.uk, and I've been advising all our people to be very, very careful in the market, to watch stop losses exceptionally carefully over the last months. I hope they listen to me.
Let's take a look at some of your stock picks. TriFast, so you can rattle through some of these quite quickly actually, because I think you've got buy recommendations on all these, haven't you?
Well, yes, TriFast it ticks all the boxes for us, Jeremy. It's undervalued. It's growing its earnings aggressively and safely. And technically, it broke out of an ascending triangle, which is one of the most bullish patterns. So again, we have this interweaving of technical analysis and fundamental analysis, which actually sets VectorVest apart. There are lots and lots of programs around the world that are very fundamental. There's lots and lots of programs around the world that are very technical. If you go to a meeting of investors, you'll see the technical analysts on one side of the room and the fundamental analysis analysts on the other side of the room, and they don't speak until they've had a couple of drinks, and then they throw abuse at each other. Okay, so there's not a lot of common ground here, whereas we're pragmatically trying to put both things together in the effort to try and make some money. So when TriFast broke out, and it's sitting, I think now at about 172, 172. We believe it's on its way to over £2. And in the pullback of the last week, it hasn't moved at all. So that bodes very well if the market should turn up. I think that'll run to £2 very quickly. Done very well out of Brexit, because it in fact does an awful lot of its sales in Europe. High-tech fastening kit, and that is an exceptionally well-managed little company. That's exactly what we're after. Okay.
Number 2. Sophion.
Yeah, Sophion again, undervalued. It has pulled back a little bit during the rout of the last week or so. It's sitting at a major support level, a 78% retracement of the last range, which is a major Fibonacci level. I don't recommend doing anything yet. When the short-term trend of the London market turns up, which I think it probably will do, given a favourable American result for Mrs. Clinton, then I think that share can certainly move from where we are at the minute at £2.50 to £5 relatively quickly. This is a quality play, and I think that when the general market, Jeremy, in my opinion, is 70% of the exercise. Knowing whether the market is rising or falling in the time frame that you're trading in is 70% of the exercise. Before you can define the time frame, you have to define, before you can define the trend, you have to define the time frame. Spread bettors, in fact, would be looking at our short-term systems, and I think in the next day or two, we could actually see those turning from down to up. We've color-coded on VectorVest, and as long as you're not colorblind, you can see the trends very easily. Okay, so Peer.
Yes, let's move on to number 3. This is you've got this here as Peer Limited. I think some people know this as Brighton Peer.
Brighton Peer, yes. This is Luke Johnson's latest baby, and again, it's pulled back. It's undervalued, growing earnings very strongly. It's pulled back in Brexit in the rout of last week, and it looks to me at around 110. That's a great buying opportunity. Again, nothing should be done today. Let the market settle, let the election get away, and I think that somewhere around the £1, 110 level, that looks like a cracking buy, and I would expect that to get to 130, 140 fairly quickly, given a decent general market. Okay.
Let's go on to the last one, Avesco. This is a media company, isn't it?
Media company in the films, all sorts of contractual services for the film industry. We believe it's significantly undervalued. Growing earnings strongly over the last 6 months to a year. It's pulled back a little bit. It's pulled back to £2.80. It could probably, I think that it's close to bottoming out now. The technical analysts out there, if you put on a stochastic indicator onto Avesco, you can see that the price has made a rising bottom. The stochastic indicator is making a falling bottom. Now that's what technicians call reverse divergence or hidden divergence. And it invariably means that there's going to be a continuation of the trend. So I think that when the general market does turn, we get a couple of green days on the general market, then Avesco is going to move up quite strongly indeed. And we have a valuation on the target, a valuation on the share at £4.50. It's trading at £2.80. There's plenty of room for a nice upside move there.
So 4 stock picks for the time, waiting possibly for a little bit of a correction before buying in. Thank you indeed for coming in. It's a pleasure to talk there to Dr. David Paul, who is from VectorVest.